Okay, good afternoon, everybody. This is Dennis Wilson with the Active Trend Traders. Welcome to Making Money, Trading Stocks and ETFs. We've been having a very good month of April, primarily buying and selling some options directionally for earnings runs, and also a couple of earning runs that we have been watching. If you are not a premium member of the Active Trend Trading service, I do attempt to get out somewhere between 10 to 12 trades that are basically bonus trades. Just my way of saying thanks for tuning into us on Fridays and Mondays for our free webinars. And we just actually sent out one today on Grub. We've been trying to get filled on Grub for a bit, and to take advantage of the activity that's going on with a pre-earnings run on Grub. So I want to remind everybody that all the materials that we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication or promise for future performance. A little bit about what I've been doing with my life since I retired from the Navy and then started trading full-time back in 2006. It's so funny, people, I guess I'm at that point in life when people actually make the assumption, oh, he's retired. Well, in reality, I'm not. I work as hard, but enjoyed a whole lot more what I'm doing now than what I was doing when I was working for the wireless industry. I want to remind everybody that the best trade of the year comes around about every 2 to 3 weeks, and with as volatile as the market has been over the last recent weeks, sometimes that's every other day. And so we've definitely have been set up into a trading range to start trading within the trading range. And the thing about it is will we be brave enough to take the trades where we need to take the trades? I want to remind everybody that, basically the active trend trading system, I was talking to my wife about this last night because Michelle is starting to trade herself. Basically we figured that was a good way for her to be able to, just in case something happened to me, she would be able to continue on in the lifestyle that she has become accustomed to. And one of the areas that we talked about last night was the 5 pillars of active trend trading. She goes, where did trend trading come from? And I go, well, basically what it was is I went back and I observed, I studied various trend trading systems, and I feel like I cherry-picked some of the best characteristics out of those systems and left behind the less desirable traits. As an example, I utilized the IBD's fundamental checkups for stocks. And because one, I don't like doing fundamentals, but I found it's the greatest place in the world to find, strong fundamental stocks. However, so that's one of the things that I cherry-picked for choosing the type of stocks that we trade in the active trend trading system. But what I left behind is I don't like to do breakout trades. And so we didn't do the breakouts. We came back to other technically sound means of getting in and getting out of trades. So here are what the 5 pillars do. Is basically the 5 pillars tell us what to trade. Okay, we're looking for strong earnings, strong growth stocks, and our premium ETFs. This is a premium ETF, if you will. Basically, UCO. This is the 3-time leveraged ETF on the oil. So the second pillar is when to enter. So in this case, we entered off of a trigger from the active trend trading system. Right here, bouncing off of the some of the moving averages. 2471 is where we got in. When to exit based on classic technical analysis. In other words, when was it running into trouble? Where was it going in and finding its old resistance? Well, up here at about $28, we closed part of the position there. And now we're waiting to exit the rest of it and watching it, or asking ourselves, do we want to add more? So what strategy we're going to use? In this case, we bought the ETF. In other strategies, we might, buy or sell the premium on a option. So this is how we built a position. I want to continue building this position. So for premium members, didn't really give us a good entry down here at 25 or so, but we'll be looking to see if we get an additional upside move. And then finally, what to expect. The probability of success with the active trend trading system is if we follow the rules, the 4 rules to get in and the 6 rules to get out, the probability of success based on backtesting and actual trading is about 65%. That's 65% win-loss ratio. And there's the other thing that we provide for our premium members is here is, when we send out our alerts, here defines how we want to trade this entity. As you can see, currently UCO is up over $30, so it has passed the 20% gain mark. The objective of today's session is just basically go some timely, actionable intel at the end of the week. Looking forward into next week, we'll take a look at the grub trade to see how, or if is it too late to get in? And the answer to that is, well, no, not really. So you have been given the keys. Now learn how to open the door. Here's where we're sitting as of about 9 o'clock this morning. The Dow it was favorable about midweek. Now it's dropped back into the negative numbers for small negative numbers for the year. S&P slightly positive, or just kind of like not moving at all. One of the things I made a comment on a couple of weeks ago, I said that what's happening is that we're getting a lot of really large range moves. Unfortunately, those large range moves are tied to little or if any traction. In other words, we're not tracking on a real strong longer term trend that we can just jump on and ride. And so what it's lending itself to is these little snap trades that you pick up 3, 4, 5, maybe 10%, and then you're out. As soon as you hit resistance, you pull the plug, say I'm out, and away you go from there. Okay, so let's take a look at the charts. If I can find the charts, there we go. Okay. SPX. One of the things, and we're going to be talking about this on the final hour today, is there are some clues on this chart that say, okay, it's time to start trading the S&P to the downside. We'll cover those at the 12 o'clock hour. But as we see what's going on here, I left the Fibonacci on from the high of March 13th down to the low of April 2nd. And actually, we got a trigger on the early warning alerts down here. We started to spike up. However, unlike what we've seen in the past where you get a real strong surge, this surge has been kind of muted. I've identified a couple of items on this chart previously for everybody that was of a concern. Yeah, we got our turnover with the TSI and even the market forecast. However, look at the shallowness of this momentum shift. The shallowness of the momentum shift is quite low, therefore bringing this rally into suspect. Yeah, when I say suspect, yeah, nice move up. However, it's looking more like I'm a rally in what might go into become a bear market, or at least a more significant correction. As you can see, weekly chart, nice shooting star. And so from this point, because it appears as I am getting a TSI crossover, I may be interested in trading S&Ps or to the downside, or one of the other entities of our ETFs for the indexes. So that's what we got going on with S&P. One of the positive things on the S&P, though, was this. We've got some just cross currents going on. We have the TSI tick up here on a weekly chart. However, look at that market forecast momentum. Still, the longer term still pointing down. NASDAQ. No, not Tesla. I don't know why it does that. Okay, NASDAQ, similar type situation. As you can see, it worked all the way up into where the selling began last time. Ticked off of that on Wednesday, sold off. Sold off. And again, for the premium members, we're going to be talking a little bit more about this. We've been covering this in some of our training sessions about how to identify these areas so that you can be prepared to either close out your position for a profit and or get ready to go in the opposite direction. Similar type situation. Positive on the TSI on the weekly chart. However, the longer term momentum appears to be going down. Really shallow momentum turn when we reverse down here off the lows. Will we get all the way back down in here? You know, haven't got a clue. We do have this trend line to continue with right there. Let's extend that to the right. And so it has found support at that trend line going back all the way to 2016 when it initially started. So we can watch for it to kind of get wobbly or stop at this area. Wobbly is a good definition of how I would define the indexes themselves. The Russell actually holding up pretty well, but we are getting a turnover. If you like the TSI and you like to work with it, here's a daily chart. Go back and just look at the TSI crossovers, both tick ups and crossovers, both to the upside and to the downside. What was the following price action? Was there a trade that you could have traded in this? And the other thing to look at is look at the divergences, both positive and negative, with even, within this. Like this was a nice little head and shoulders formation down here that it finally broke out of. And so that's one of the reasons why I really love the TSI. We hit on that TSI a lot in the active trend trading premium service, and it's one of the better momentum shift indicators for the internal momentum that I've been able to find. So again, positive true strength index on the weeklies. On the Russell, let me get rid of this briefly. And as you can see, Russell it broke out above the 7186 retracement, reversed back down. That basically is a negative sign. And if it fails at the 618, then we're probably going to go tapping down, stair-stepping down to each one of those levels of the Fibonacci's on the way down. The 50%, the 382, the 236 or 238 down in this area. If we step all the way back down to the bottom of the chamber. But Russell, as the other indexes, also has this longer term trend line, which goes back to right here, back in 2016. It is still in play and it's still supporting it. If that is busted or to the downside, then we can look for some retracements back to the 450 level and all that kind of stuff. We are in a series of this is really just a kind of like a tight little triangle here, and I'll draw that in for you guys so you can see that somewhere coming like down around here and up through here. And eventually we're going to get a bust out, either the upside or the downside. And what I like is we're getting this great symmetry of it came up, hit, okay, once it established the point and you've got the little downtrend line, came up and hit it again. Again, multiple clues there. 786 fib extension or retracement going along with the trend line to the downside. The question is, and what's really challenging is, dadgummit, waiting for you to get that signal. But when we get that signal, we're sitting there scared to death, going, it's going to continue blowing on up through the trend line. But in this case, as you see, technical analysis again, won the day. So let's take a look at here's where we're sitting as of the 9 o'clock this morning. we're basically sitting at about a 12.57 return for the year so far. Now we're watching for seasonality in several entities. One, gold, and we really honed in on there are areas of seasonality that we just have to be ready for. In gold, it turns out to be somewhere between the June-July timeframe. There are other areas of seasonality, but this one across both the 15 and the 40-year time span. The June-July timeframe tend to be basing periods for this larger move that happens from the into August and going into September to the first part of October. Then you get a sell-off, and then everybody buying that gold, those gold rings, and for Christmas and all that kind of stuff results in another pop at the end of the year. I want to thank Eric for sending that article to me about seasonality and what the physical causes of seasonality are. As you can see, we are in the April timeframe here. NASDAQ tends to roll up during this time of year. Again, strong returns last year may mute what we see going on this year. There's one thing that we just absolutely want to be prepared for, both on the NASDAQ and the Russell, is it's this time frame here in the October, from about the last part of September into about the midsection of November for this end of year burn. Traditionally, and the tendency is that the Russell always moves the most percentage-wise during that time frame. And I'll move back here. Again, similar type situation. NASDAQ gets a little bit earlier turn, and away it goes. And it does next to the best. And so just keep that in mind as we prepare. Make a note to yourself in your journal or put it on your smartphone to say on the, let's say the 1st of October, have yourself, have it send you a message, an appointment message to say, get ready for seasonality for both the NASDAQ and the Russell. You can do that then. And then in June or July, you can say, the 1st of June, send yourself a text message or send yourself, set an appointment to say, check the seasonality of gold. That way you don't have to try to remember it. And that can work really, really well for you. Let's move ahead. So here's where we're sitting as of strategy 1. We just opened the position in Grub. Okay, we'll cover that here shortly. We had basically taken part of the position off in the pre-earnings strategy 2 trade. This is to generate cash flow. We had a partial profit of $560. We'll be holding the rest of that. The option here all the way up until the day before earnings, because Grub announces on the 1st of May, but pre-market. So that is the way that goes. Then the leaps here did okay with the options on Tesla this week, generated about $400, and we just got the setup on BABA that we entered towards earlier in the day to take into next week. As you probably all know, strategy 2, we're trying to refine this so that we can generate somewhere between $500 to $1,000 per week, and so far for the year, we're averaging about $480 for the week. So basically, hey, I look at 2018 is a breakthrough and restoration year for many of us. And so that's all we have for today. I'm going to cover a couple of charts and we'll come back to this. Keep growing the egg and trade wisely and profitably. And then we'll get ready for premium members the next final hour, which will be coming up here shortly. Let's take a couple. I just want to basically throw out a couple of ideas for the rest of the week. First, going into next week. First, TZA. Okay, TZA is the inverse ETF, 3 times leverage ETF for the Russell. So if the Russell continues to correct, or just basically corrects back to where it was previously, then TZA is going to run from about where it's at right now up to probably about 1250. If it respects this trend line, it could be a little bit less than that, maybe 12. But watch that. We're getting a TSI tick up. Market forecast has not ticked up yet. Doesn't look very positive on the weekly chart, similar to how it doesn't look, or how it does look positive for TNA or IWM on the weekly chart. But if this reaction repeats itself, we've got a stop that's slightly below the 1035 level. So we would say 1035. Say put a stop down there about 1010 or maybe $10. I would want to see some kind of a pullback into this area about 1070. I recognize it's only about 20 cents, but I would rather get into a trade around the 1070 level, anticipating that to move up. And as you can see, that would you'd have about a 70-cent worth of risk to go with that. Upside projection. If we jump from here, if it gets up to the 1250 level, that's a 16% move. If it gets back up to the past highs, you're looking at almost a 20% gain, and just probably a few days, like within a 20-day period. How long did it take it to make the last turn? It went from here up to its high, and it did it in 19 calendar days, or 14 trading days. So that's about about 2.5 weeks worth of trading days. So keep that in mind. Then Grub. Okay, here's what we're looking at Grub. This level here at the 820 combo is in fact holding. We're anticipating that continue to hold. And so based on, I'm going to roll over here to a intraday daily chart, perhaps. Yeah, here we go. So earlier today, it was just holding right about here, looking like, it was looking like you had a TSI tick up on an hourly chart here. So that's when we went ahead and took the price. We took the order at 102, and so you may have been filled about 102 to 102.10. That was the objective. And the thought behind this trade is, what do we have going on? We've got on the daily chart, we've got momentum all swinging up on both the True Strength Index and the market forecast. And so the anticipation is for it to, prior to earnings, which is 5-1, for it to go ahead and break out of this and run up here to, if it runs up to the Keltner channel, you're looking at about 107 to 108. Runs to the top of the range, we're looking at about 110. And so not a huge move, but 7-8% move. And on these pre-earning trades is what we're looking for, is about somewhere between 5 and 10% over a 1 to 2 week period. So as we say, right now we are in the trade. We're watching the yellow line, the 50 period moving average on the intraday 1 hour chart equates to the 8-day moving average. And so that's, it is holding that. So what is that? 101.12. You can see over here, we've got the 8-day is at 101.04. So they're usually within, 10 to 15 cents. So those are the two that we were looking at. Grub we covered. So, okay, a couple of other announcements. I will be back on the mainland on the 2nd of June. We'll be co-sponsoring at the Bay Area Moneymakers. We'll be co-sponsoring with the Silicon Valley Options Group, and I will be talking about turbocharged covered calls. for the option groups, but it'll be open at the regular meeting day, regular meeting place, the Masonic and in San Jose on 2 June. So, and then I see Eric asked, did we exit the EWA? Yeah, Eric, we lay that out there, and we're not really calling when we're exiting or anything. We're just basically, that it's got a track record where typically, the exit part of the management we're leaving to the individuals, and so okay. So until next time, first, I want to say aloha. Until Monday, trade well and prosper. And then lastly, I just want to wish this lovely lady, that's my wife, Michelle, today is our 44th wedding anniversary. And hard to believe that she has stayed with me for 44 years, but by now I'm just a bad habit that she can't give up. And so, hey, thank you guys. Hey, until next time, have an absolutely fantastic weekend, and I'm going to go get ready for the 12 o'clock webinar for the premium members. So have a great weekend. God bless. Aloha, everybody.